For this year, what we said was that growth would be lower by about 1/4 to 1/2 percentage point relative to the baseline, which is about 7%. So that's,
That's how it comes to.
That's between 6.5 and 6 3/4. So it's not 6.5. So between, and we have to be, modest in recognizing that there's.
But what are you relying on to assess this impact of demonetization?
So we've done a very detailed calculation of, what the cash projection is for the economy, what is the ratio of cash, non-cash in the economy, and what is the magnitude of the cash squeeze, what is the timing of the squeeze, and therefore how it will affect economic activity. So it's kind of a very detailed analysis which we've shared.
Yes, you have.
It could be right or wrong, but that's how it's calculated.
Fiscal year 6.75 to 7.5%. Are you projecting a far more accelerated pace of growth for next fiscal?
No, I think it's
because even if demonetization is going to have a transitory impact, the impact will perhaps wane off a little more slowly
so
than
that's
this.
why there is a recovery next year relative to this year. There's a temporary decline followed by a recovery next year back to close to something like the pre-monetization trend rate of growth. And again, there's a lot of uncertainty. That's why we have a range, and a lot will depend upon both domestic factors and international factors.
The survey also very categorically says that there will be windfall fiscal gains from the extinguished currency. How are you arriving at that figure? Because to be honest, RBI hasn't put out those figures in the public domain, which perhaps they should have by now.
No, by the way, I think we say very clearly that there could be a fiscal windfall. The magnitudes are uncertain, and we'll have to wait till the RBI tells us what those magnitudes are.
What sort of fiscal windfalls are you referring to?
So actually, let me clarify that. Actually, I said something that I should elaborate on. See, everyone thinks that the fiscal windfall is just about the unreturned cash that doesn't come back. But that's only one part of the fiscal windfall. The other, so in a sense, that's a lower bound on the fiscal windfall. The other part of the fiscal windfall is the money that comes in via taxes because all this has been declared to the tax authorities. So there are two sources of fiscal windfall. One is, the unreturned cash. The second is higher declarations and therefore higher payments under the Pradhan Mantri Garib Kalyan Yojana. So there are two sources of windfall, and we will have a better sense of the first one, in the next few weeks, once the RBI announces the numbers, and at the end of the year, we'll get to know what the other
tax collections would have been. Your survey also says that the currency shortage would have impacted farm produce, and yet the survey is talking about a robust agricultural growth of 4.1%. Are hopes mismatched there, belied?
No, see, I think the major Rabi crops, wheat and gram, I mean, you've seen a record increase in sowing, right? So even if productivity is affected to some extent by the fact that, the access to inputs was impeded to some extent by demonetization, I think you expect agricultural production as a whole to be quite substantial. So that's what drives the GDP forecast. But there could be some smaller commodities, vegetables, milk, etc., which have been affected, and those are more likely to show up, after, in the next fiscal year. But it's something that we should be watchful about, vigilant about, because, demonetization both affects demand and potentially affects supply as
That's
well.
right.
Yeah.
So when you say it affects demand, which side of this argument is going to weigh on as far as pricing pressure is concerned? Because your survey also goes on to say that next year monetary policy may have to be capped because of the potential price rise that we may see in fiscal year 18, and you're also talking about the lower interest rate regime. Balance the two arguments for me.
So it's primarily an aggregate demand shock, liquidity, and therefore I think on balance you would think that overall prices would be lower than they would otherwise have been. That's quite consistent with some prices going up. Next year, I think that if agricultural prices they don't surge too rapidly, if international prices, oil prices don't also, then I think the price situation next year will be more smooth. But the other point that you raised is that, as we said, what is very unusual about demonetization is that it's a very unusual kind of, the impact on money is very unusual. One type of money, cash, has declined very sharply. The other kind of money, which is deposits, has surged.
That's right.
Yeah, and that's why what happened is that when that money came back as deposits into the banking system, interest rates came down dramatically, G-Sec rates, etc., etc. So
That's
in
right.
that sense, there's already been some easing of policy by demonetization, which will have an impact on credit and so on.
And we perhaps saw the banks pass on the lower rate for the first time.
Yeah. They've already done so on the
Exactly.
MCLR.
You said that the impact is transitional, just like the rest of the government is saying so as well. When do you see this transitional impact wane off? When do we go back to normal levels?
I mean, to
April
some,
2017 is what the survey says.
yeah, it's going to depend upon, basically replenishing the currency, transactions demand for currency. Whenever that's done, I think, in a sense, that's when the demonetization shock, as it were, has completely been reversed.
But will you be honest to admit here that we will go back to normalcy only when all of the currency that was outlawed, when we go back to pre-2008 levels, which means 16 lakh crores?
Not necessarily. I think that, that's something, it's a good question, and one has to be, think about this carefully. See, the impact of demonetization, if it's had any impact, a part of that impact will be reflected in a lower demand for cash than before pre-monetization.
That's right. Yeah.
That's one. Second, to the extent that digitalization takes off, that should also lead to a reduction in what people, the desired amount of holding of cash. So when we made these projections, we did factor into account these things. So it is not, strictly speaking, right to say that it's fully reversed only if you get back the old level of cash, because the regime has changed. Regime change.
And a lot of that cash transaction has perhaps moved to digital already.
Exactly.
I do want to ask you a question. When you say that, I want to go back to monetary policy for just a minute, because a lot of people believe that the RBI held its horses looking at what demonetization will do, or looking at what the government will do in the budget. What sort of an interest rate regime are you looking at as we step into the next fiscal?
Well, I mean, remember, the RBI, as I said then, quite rightly made the decision it did for 2 or 3 reasons, right? One, the international atmosphere was very volatile at that time, and second, remember that the flow of money, into the banking system, also they had to take a view on how much of that would be permanent and how much of that would be reversed.
That's right.
So over the next few months, that will become more evident, and then again, depending upon how the inflation outlook is and these developments, we'll have to see what interest rate policy should be.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.